Welcome everybody back to Boosted Motion, guys. And we got to talk about this, right? We got to talk about, are these banks, are these dealerships doing predatory practices? Are they really using us and taking our money? Guys, you already know what to do. Let's hit that intro. Welcome everybody back to Boosted Motion, guys. Good morning, good afternoon, and good night. Thank you. Welcome everybody back. Welcome everybody back to the channel. First thing, hopefully my Boost in Motion family, you already hit that like button. Thank you, and I really appreciate you guys. And to my new Boost in Motion family that's watching, I know you're not subscribed, but if you enjoyed this video, hit the like button, hit the subscribe with the bell notification, and let's hit all. So guys, in this video, I wanted to just quickly talk about it. I dropped a video recently talking about how car prices are going to come down because the Fed raised interest rates, right? And I read through some of the comments, and what I found out was this, right? So there's different things, and I'm gonna react to different comments. But this one actually stuck out to me. It talked about mainly that these dealerships use predatory practices on pretty much how to target low income people or people who necessarily can't afford vehicles, right? And I want to really talk about as a culture behind it. I really don't like what dealerships do, but let's just talk about the culture of this. Americans or people around the world, but I'm just gonna say primary Americans, we like to spend a lot of money on cars. I think that's our second most expensive thing we buy in our lives versus the house, second is a car. And it's very common practice now that the average car payment, I believe now is $700-800 a month. It goes up really, really high. And this is the average car payment compared to what the average person makes in America, which is a pretty huge discrepancy, right? But we talk about this idea that these dealerships are using predatory practices, but people go to the dealership and they necessarily are trying to get a car they cannot afford. Let me use a quick example, right? Because we focus so much on the car payment rather than how much the car is actually priced or worth, is why most of us end up in a financial bind. And what I mean by that is this. You'll have it. I am now 34, 35 years old, right? What happened in the last 15 to 20 years is absolutely ridiculous because 10, 15 years ago, you wouldn't see an 18-year-old driving a $30,000 car. That wasn't something common and easy for people to actually get access to, right? But nowadays, an 18-year-old making $15 an hour can drive a $30,000 car because all he's thinking about is the car payment. A $20,000 car for a $20,000 note or payment should be somewhere right around I think $300, $350 per month, right? And financially, that's not really a good idea when you're making $15 an hour. But depending on your lifestyle, depending on where you live, if you live with your parents, if you have a partner, depending on your lifestyle, you somehow make it happen. But our car payment, in my personal opinion, I know I'm not a financial advisor, but ever since I was young, I sat there and said this: I don't want my car payment to ever be more than a quarter of my take home pay. No matter what you do, how much money you make per month, that is a ratio I kind of stick with. I might go to 35%, but that's something that I chose to do when I was younger, from when I was 18 and right now to 34. And it has worked for me. But we also don't sit there and think about, well, you know, but they're predatory. You'll get subprime loans at 15, 20%, right? As of right now, if the average price for average percentage interest rate for a used car right now is close to almost 10% because of these rising interest rates, right? But people with really bad credit are paying 15, 20%. I'm being honest with y'all, if anyone's watching, are they putting a gun to any of you guys' heads saying, get this car? No. When I tell my friends and family, anybody I know that's close to me, purchase a car that you actually can afford. Yes, I understand you pay attention to the payment, but how much is the actual car? And also on top of that, because we live in this day and age now, right? You guys need to be very careful with this next part. Because we want to be part of the Joneses. We want to purchase these more expensive cars, right? Um, this is how you guys get yourselves financially in the biggest issue, the biggest bind. Because now what's going to happen is, because the wholesale prices of cars are going down, right? And you're also being charged these higher interest rates, right? Now what's going to happen is, a lot of you guys are going to end up with your cars being upside down. And what does that mean? That if you went to go actually trade the car in for another car, you're upside down. That means you actually owe. So let's say that you finance the car that's 30,000. You finance $25,000, right? But the car is only worth $20,000. That negative equity has to roll into the new car payment or the new car, whatever it is. You still have to pay that off at some period, no matter what, right? Or let's say you was trading it in, the bank will say, hey, listen, I know you want to give us 10 grand for the next car, but you're going to have to add the next five on top of that, or we roll that five over into your new car payment, right? And because of these swift changes that's happening right now, people who really can't afford cars, that was already kind of hard for them to get a car, are now going to get pushed into a point of where their cars are going to have less value. Just in the last 3 to 4 months, uh, wholesale wholesale prices went down between 12 to 15% at the auction for dealerships. So just imagine how this is going to correlate on your resale value or your trade-in value when you go to try to trade in your car. So now what's going to happen is you already paid this high interest rate. Now the car is worth possibly 10 to 15% less now at auction. And now you are stuck with paying, you're upside down on a car that you may necessarily not even want anymore. And I think this is just a culture thing that people don't understand that they're doing. Yes, are dealerships predatory? Some are. But also I gotta blame the user. No one put a gun to your head to go to the dealership and not get your credit in order, not get your finances in order, and get anything in order, not to put down enough money so that you guys won't be upside down. At the end of the day, none of my cars actually lost. Okay, I would say on video, most of my first cars, my Maximas, are all purchased cash. After that, my G35X was financed. I ended up crashing it, but I wasn't upside down. The car on wholesale value was actually only worth like 9K, and I paid like 14K for it. But when I crashed it, I actually made money back. You see what I'm saying? And both my Q50s were leased, so never really had, and I didn't total those cars out. And my Q60 was financed, and I sold that because of the inflated market for the same, about $1,000 more than when I bought it a year and a half before then. Now I have a Mercedes C63, and the loan to value is actually very similar. I owe about, I think, mid 30s on the car, somewhere around there, and they sell it wholesale for right around that price, or maybe even more depending on mileage. So I'm right around. If I went to go trade it in, I wouldn't lose any money on it. But a lot of people who don't pay attention to interest rates, don't pay attention. I know you guys don't pay attention to wholesale values, but use KBB. There's a lot of online websites that you guys can use to see what your actual trading value will be for the car and what the car may actually go for wholesale. That's kind of hard to get some of that information, the wholesale value, because that's mostly for dealerships. But these book values are very important. So all in all, I just wanted to make this video. Say this. As much as I want to come at the dealerships, we have a culture of people who bet against their income that they're going to make in the future. So they go and get these cars for these expensive prices. And I understand we want to drive these nice fire cars, but at some point you got to sit there and say, yo, you're paying $600, $700, $800 a month, and you're only making like $20 an hour. That's almost 50% of your take home pay. At we're living way above our means, and I understand you want to drive these nice cars, but we got to stop this. That's why repossessions are going up. This is why people are not going to be able to afford it, because if you lose that job and you don't have another job or income, there it goes. They're going to come get that car in 2 to 3 months. These banks are not giving you guys 6 months. There's no more extensions. That is it. It is 2 to 3 months now for them to come and get your car. 2 to 3 missed payments. That's it. So outside that, guys, you have good morning, good afternoon, good night. Thank you for tapping with your boy Boost. I just wanted to actually just, share some my personal experience and what I actually do know. I know I'm not a salesman in the car industry, but I definitely have enough experience to actually speak a little bit. And if you guys think I'm wrong about anything, definitely comment below. Let me know. But outside that, guys, you have a good day. I really appreciate it. You can add me at Boost Emotion IG and Facebook. Also have a boostemotion at gmail.com. Otherwise than that, guys, I appreciate it. You guys have a good day. Thank you. Thank you, everybody, for watching. Do appreciate you guys. Love you guys very much. You can also check out the 2 links I posted for some of my other videos. Also, on top of that, if you want to purchase some Boost Emotion merch, definitely check the link that I posted also. And finally, if you've been watching all my videos and you enjoy them, please hit the link to subscribe to my YouTube channel.